is I say to people, okay, maybe you don't believe in it, or, and I'm never suggesting anyone should put all their money in Bitcoin, but to have zero of something that might really go, I think this will go up 10x, and then I think it will go up 10x again. I'm talking over a decade, okay? But if that's really what it's likely to do you want to own none of it? Why not have 1% of it or 10% of it? If 1% and you're wrong, so you lose 1%. If you're right, you might make 10x, you might make 100x. And I fully expect Bitcoin's going to go to 200,000. I fully expect gold's going to go to 5,000 in the next couple of years.
For Lepard, gold and Bitcoin are complementary, not competing assets. He describes gold as analog sound money and Bitcoin as digital sound money. Lepard is optimistic about the potential for both gold and Bitcoin. He projects gold to reach $5,000 per ounce and Bitcoin to hit $200,000 within the next few years. These predictions are grounded in his belief that the global financial system is heading toward a significant reset. The ballooning national debt and unsustainable government spending, he argues, will eventually force central banks into massive money printing, driving up the value of sound money assets. Lepard explains that as gold prices rise, the profit margins for miners will expand dramatically, creating outsized returns for investors in this sector.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Bitcoin sat flat. Most of this year, Bitcoin was stuck. There was a big joke about it on Twitter, the meme, the 58,000 club. It kept hitting 58,000, wouldn't go anywhere, Gold broke out. And I own both, and I have friends in both camps, and I think the camps should be friends, not enemies. But I found all the Bitcoiners saying, hey, what the hell's going on? Gold's going up, and our shit's not. And I was like, this is the way it happened every last couple of cycles. Gold is bigger, more widely distributed, more people understand it. It smells it first. Gold moved first. I said, you should be happy that gold's moving because it means Bitcoin's about to move. And it was about the same amount of a lag time. It was like 3 or 4 months. Gold broke out in March, and no, it was more than 3 or 4 months. It was about 6 months. And then Bitcoin really started moving this fall, right? And now it's moved with great authority. With respect to the Trump thing, yes, I think what happened is, look, gold has had one hell of a year. There aren't a lot of years where gold's up 30%, from 2070 to 2700. That's a hell of a good move for gold. And it was ready for a rest. Bitcoin, on the other hand, had just started to move. And yes, I think the final thing that pushed the Bitcoin move was that the Harris administration, well, the Biden administration with what was it, Pocahontas, the Warren, Senator Warren, hates Bitcoin. They hated Bitcoin. They were giving all the Bitcoin companies tons and tons of trouble. There were a lot of worries about what might happen to it and if Harris won. And obviously Trump has signaled, and Kennedy and others have signaled that they're extremely pro-Bitcoin. And you've got now Senator Lummis has introduced a bill for a Bitcoin strategic reserve, which would be a huge thing if the U.S. government started buying Bitcoin and putting it on its balance sheet, the way we have gold as a store of value. So I think that the political earthquake that kind of occurred when Trump won was extremely positive for Bitcoin, and that really added rocket fuel to it. So yeah, I think that's the biggest part of the explanation. I think that the Doge committee, that Vivek and Elon, they will cut some expenses. They will get us moving in the right direction, and they'll slow down the just absolutely insane spending, and that's a net positive for the country. But I don't think it will be enough to prevent what I call kind of the revolt of the bond market, which I then think is going to lead to what I said earlier, kind of the big print. And I think when the big print comes, our stuff's going to go nuts. I'm like I said, I think we were talking off camera before, and I fully expect Bitcoin's going to go to 200,000. I fully expect gold's going to go to 5,000 in the next couple of years. So, I can assure you, if running a gold stock mining fund, gold goes to 5,000. Oh my goodness. This stuff is, all the suffering gold stockholders out there, like you, me, and probably a lot of your listeners who've been wondering what the hell is going on. This stuff stinks. We're going to be very pleasantly surprised. So that's what I see coming. But, it hasn't happened yet, and I could be dead ass wrong, And it's hard to be patient. I mean, I get it, you know, it's really hard. I mean, I'm having a hard time being patient. So totally understanding all the frustration, but I don't know what else to do. Because it's not like I want to go buy bonds. And it's not like, I mean, it'd be another thing if the stock market were fairly priced and there were some really good opportunities over there, I'd say, okay, fine, let's go buy stocks. But the stock market is it's a record, If you look at the numbers on the stock market, I mean, we are more expensive than we were in 1929. It's really crazy, crazy overvalued. I always say to my clients, the only wrong allocation to Bitcoin is zero. And gold and Bitcoin are different. They're both sound money assets. I call gold analog sound money. I call Bitcoin digital sound money. Bitcoin is growing faster than gold because it's on an adoption curve. And it's got a lot more asymmetry than gold, but there's a price to that. And the price is volatility. You have to understand that we've had 4 or 5 cycles where the price of Bitcoin has gone down over 50%. So, and so the time where I've seen people get hurt is they buy Bitcoin, it goes down 50%, they panic and they sell it. Because if you wait 4 years, it always comes back and goes on to a new high. But you've got to understand what you're buying. But back to how one goes about buying it, I think you make a decision that you want to buy it. You can buy it through an ETF. You could do self-custody. There are reasons to do that, but it's more complicated. And I think maybe you start with probably the best book on the subject, which is a book called The Bitcoin Standard by Saifedean Ammous, A-M-M-O-U-S, widely available on Amazon. It's probably the best-selling Bitcoin book by far. And it will really kind of walk you through and explain the investment case for Bitcoin and then how you do it. And then beyond that, there are some other books that kind of teach you, some of the subtleties about how the network operates and self-custody. And, it's a big rabbit hole and you kind of got to go through it. But if you just, the beautiful thing, one of the big positives that happened this year, and I think actually did drive the Bitcoin price a lot, and I was shocked it happened, to be honest with you. I thought they wouldn't do it. When they approved the Bitcoin ETFs, that was a big deal. I mean, a lot of people who were my friends said, well, I'm not going to invest in that because the government's going to outlaw it. There's no way they're going to let that happen. It's money they can't control. They don't want you to do that. Well, okay. But then the SEC approves an ETF that has it. And I was like, oh, well, that's a little different, isn't it? So, so now if you have a stock brokerage account, you can say, buy me FBTC or buy me IBIT, and you effectively own Bitcoin. Now, you don't entirely own it. You own it as a proxy through a brokerage. And if that brokerage fails or if the government decides to seize all the Bitcoin, you've got a problem. And that's another layer that's down the rabbit hole that leads to self-custody, which means you've got to get your own cold wallet and you've got to learn how to self-custody, you got to learn how to store it. You don't learn this overnight, but it's imminently learnable. And any Bitcoiner that if you have a friend who's a Bitcoiner, they'd be happy to teach it to you. There are tons of videos and books that teach it. There's a guy on Twitter called BTC Sessions. He has an enormous number of videos. And you just go watch those, and pretty soon you'll be a Bitcoin expert. You'll feel very comfortable having your own coins and self-custodying, and you'll have what I consider to be the most asymmetric bet out there. I mean, again, I would really encourage people to go to my Twitter feed, look back a day or two, and click on my presentation, because there's some charts in there that show the relative performance of Bitcoin, gold, and this S&P. It's just crushing everything. And so, as I say to people, okay, maybe you don't believe in it, or, and I'm never suggesting anyone should put all their money in Bitcoin, but to have zero of something that might really go, I think this will go up 10x, and then I think it'll go up 10x again. I'm talking over a decade, okay? But if that's really what it's likely to do you want to own none of it? Why not have 1% of it or 10% of it? If 1% and you're wrong, so you lose 1%. If you're right, you might make 10x, you might make 100x. So it's that kind of a thing. It's a very asymmetric bet.
Lepard recommends starting with foundational education, such as reading The Bitcoin Standard by Saifedean Ammous. He also encourages exploring self-custody options to fully understand and control one's Bitcoin holdings. While ETF provide convenience, they come with risks tied to brokerage failures or government intervention. Lepard highlights the overvaluation of U.S. equities, particularly the tech-heavy indices like the NASDAQ. He warns that the Magnificent Seven, stocks which have driven much of the market's gains, are at risk of entering a prolonged bear market due to their stretched valuations. In contrast, he sees Bitcoin and gold as undervalued assets poised to outperform in the coming years.
The Magnificent Seven and the U.S. stock market at record highs have kind of been sucking the oxygen out of the room. So the average investor, if you own Apple, you own all those other, stocks, you own the NASDAQ and triple Qs, you've done pretty well for, the last 10, 15 years. And, you're going to stick with it. It's kind of like, this is working. Why should I leave? And, NVIDIA, I mean, good God, there have been some killer stocks, right? So that's one. So people don't think they're doing anything wrong, even though all those stocks are at record valuations, and I think are at very great risk of eventually entering a bear market. I'd say the second thing is that the gold stocks, it's a spread business where you're making the difference between the price of gold and your cost of mining. Cost of mining is your what they call your ASIC, your average sustaining cost to pull an ounce out of the ground, and that's going up with inflation pretty consistently every year. ASICs used to be, a few years ago, they were $1,000 an ounce. Now they're $1,400 an ounce, and in 5 years they'll probably be $1,800 or $1,900 an ounce. So you need higher gold prices to keep your margins the same. And I think what's going on is as I said earlier, I think a lot of people kind of believe that this 25, 6, 700 price, it's an anomaly. I'm seeing a lot of models out of Toronto and other places. We're going back to 2,100. You get on Bloomberg and you Google analyst consensus estimate for 5-year out gold prices, it's like 20. It's like 2,000, or maybe 2,100. Well, guys, 5 years out, I think gold's going to be 4,000. So, and I think as a result of that, people are saying to themselves, well, these stocks, if gold goes back down and we know there's inflation, so their mining costs are going to go up, their margins are going to be shrinking, why should I own them? And so what needs to happen is we need to have that psychological shift where people go, oh, you know what? Gold's not going back down. In fact, gold's going up. In fact, gold's going up a lot. And these margins are, and yeah, there'll be 10% inflation in the ASICs, but guess what? The price of gold's going to go up more than 10% a year. So the margins are going to be growing. And then suddenly everybody will be discounting and building models on $3,500 gold. And I can assure you, my companies that I've invested in, they're doing really well at, they were doing well at 2070. They're doing great at $2,500 or $2,600 gold. And they'll be just coining and minting money at $3,500 gold. And that's where I think we're going. But I don't think the market believes that.
Lawrence Lepard's insights offer a compelling case for diversifying into sound money assets like gold and Bitcoin. As he aptly puts it, these assets are not competitors but allies in the fight against the erosion of fiat currency value. While patience and education are required to navigate these markets, the potential rewards are immense. Whether you're a seasoned investor or new to the space, now is the time to consider the role of sound money in your portfolio. The macroeconomic and political winds are shifting, and those who position themselves early stand to benefit the most.
Please like and subscribe my channel.